Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, July 1st, first day of the third quarter. Let's take a look at futures. Equities are flat. Oil's up 1.25%, and natural gas continues its breakout, up 2%. Looking at the macro calendar today, got some important numbers. We got challenger job cuts at 7:30, jobless claims 8:30. We've got final PMI and ISM manufacturing at 10. We've got natural gas inventories at 10:30. And we've got OPEC meeting as we speak over in Europe. And I'm not sure the timing. I'm not sure they're sure the timing. But what will emerge out of that meeting is what they're going to do collectively on production. I think what's baked into the cake is adding 500,000 barrels to their production number, but I don't think that's going to be enough to swamp the market. Now, if they come out with a lot more or decide not to bump up production, then that should have an effect on the oil market. But oil was up yesterday. Oil's up this morning. So I think, the market seems to think that they're not going to do a whole lot on the production side to stop this bull run. So, but something to watch, especially if you're in the trade. Keep your eye peeled to your news sources on that, and you'll see it in the charts. So be aware of that. And then, of course, all eyes on the June jobs report, which comes out tomorrow at 8:30. And just on a production or a housekeeping note, I have to leave early today. I've got some errands to run in the afternoon. And then tomorrow, I think what I'm going to do, instead of trying to come out with a before the bell morning video with the big jobs report at 8:30 that could make the whole thing null and void, what I think I'm going to do is wait for the jobs report to print and then see if there's some kind of dramatic action in the marketplace, and then come out with a little something quickly after the jobs report, after that reaction, and see where we're at and try and get that to you before the opening bell. So that's what I'm planning for this afternoon and tomorrow. So, I mean, there's not a lot to talk about here. This market continues to, actually just, oscillate within pennies. I mean, we got a $428 stock here that's moving 36 cents. You can see here just not a lot to talk about. Up at the top of the range, just from a technical perspective, you'd think we'd either push up for a tag and then come back to the midpoint or support and then continue to grind higher. But we have to see. What I want you to watch is momentum. We've got a bear cross, a high-level bear cross here, and we're up in overbought territory here. Now, those are not outright sell signals, but I think what you're going to see today, if I'm to look ahead and guess what's going to happen today, I think you'll see probably more suspended animation ahead of the jobs report, and then tomorrow we'll get some kind of reaction. I don't know if the collective marketplace is going to want to take some kind of big position right ahead of the jobs report that has the potential of, wiping you out. So anyways, I expect some range-bound action today. Of course, we'll just watch the charts and take it from there. 30-minute chart, you can see this tight trading range of about 75 cents. If you get a breakout today above 428.25, and it looks like it's making a move higher, you can get long against the top of this box here, no problem with that. And if if there's a pullback into 427.5 and you want to get long at the bottom of the box, that's fine as well. Or if there's a break below 427.50, getting short there and looking for 426 is fine as well. It's just, I mean, this is tough trading in here when there's no impulse either higher or lower. It can turn into frustration very quickly. And if you're an active trader, you know what I'm talking about. And if you're more of a daily or position trader, it's 30-minute charts are inconsequential anyways. So we're still in a bull trend. If you're long, I just suggest that you ratchet up your stops and your strikes. Make sure you have banked this move. If you've gotten long at any point in between, just be sitting at a more or less neutral position. You can be long, but make sure you're kind of at the money, because with these embedded gains, you don't want to just sit there and have that at risk. So especially if you plan on holding into the jobs report, who knows what could happen there. Same kind of story with the Qs. We've been in the rising channel. The upward momentum has waned. We're at the bottom of the channel here. What we need to watch for is a break of this channel that could bring it down into 351, and then we've got these little gaps here that will need to get repaired at a certain point. And just to add to that a little further, if we limp through here, and we get below the channel, but we stay like right around 354, I don't think that's a gonzo short. Oh my God, it dropped below Chris's, brown line here. We're out of the channel. If you're a bull, you'd prefer not to see that. But, if you come out here 1 or 2 bars and it's not impulsive, I would just sit tight, especially if you're committed to holding through the jobs report tomorrow, because I imagine what's going to happen is you're going to get a big green bar or a big red bar, or at least there's going to be a bias based on that jobs report number. So, if we're sitting right here at 354, it's either going to recapture the channel or it's going to come back down. So I think tomorrow, pre-market, we're going to know if that jobs report had any kind of, material effect on the overall market. 30-minute chart, you can see this narrow range here. We just talked about, if you're going to try and actively trade that, you can just, trade it outside the range. As you know, if you've signed up at tradersprofitcompass.com and you are getting my intraday emails, I'm backing off. I'm staying more neutral here ahead of the holiday, ahead of the jobs report. I don't really feel like I have an edge at the moment. Does that mean I won't grab something intraday, for a 3-hour trade? No, but I've built some cash up, and then I think I'm going to pick it up either tomorrow after the jobs report and there's some dramatic move, or more likely it's going to be on Tuesday after the holiday clears. IWM, steep rising trend, backing off. I still think you key off of 229 today. Above 229, you can see 231. If it cracks below, you could come back in here to 227 and 225.50. What I've done here on the 30-minute chart is just scratching a downtrend line. It's not perfect. There wasn't a perfect touch here, but I think it will serve as a line of demarcation for you if you're active trading. For instance, if we come down here to this 228.75, and then you get long, or we bounce and you wait for this downtrend line to be taken out, that would be a bullish development. Whenever you take out a downtrend line, it opens up some running room, and then you can play for 230.50. And then if 230.50 gets taken out, you could see 232 on the upside. And by the same token, if you break below, then I see this 227.50 as your next level of support. Facebook remains very interesting. We had the impulsive move on that FTC case getting dismissed. Now it is consolidated at the 50% halfback, and we've built this pennant, this bull pennant, if you will. If you're an active trader or you want to get long Facebook for a more duration trade, you can fine tune your entry right here. If you get a breakout, say to 349, 350 for sure, you can get long there against 348, and at a bare minimum, look for a move back up to the prior high at 356. And if the bull pennant plays out fully, you could see a move way up here just on a measured move basis. If you consider this as an impulsive move and then take that measured move from here and add it on, I mean, you're looking at something in the high 360s, low 370s. Even if you take a more conservative view and say, nah, that really wasn't the impulsive move. This was from 340 to 356. That's $16 added on to 348. You're looking at 364, 365, 366, right in that area. So, I mean, it is definitely a bullish setup. And if you want to take something on a breakout here, that certainly makes sense technically and would be very objective against this 348 level. Apple continues to grind higher. It's lost a little bit of that impulsive type move, but Apple's a slow mover. It's not gonna go like some of these small caps and other names. So all eyes now are focused on 138. If you break 138, that opens the door to 144 to test this prior high. I mean, everything looks good. PPO strong, not even starting to flatten or roll over, and RSI is strong as well. So I wouldn't be surprised. Well, I wouldn't be surprised about anything, but I wouldn't be surprised if price were to consolidate here right below 138 to kind of gather itself before the jobs report. But if you don't see that, if you see an impulsive breakout above 138, you can certainly get long and see if there's an extended move towards 144. But, if you got long down here at 128 or any point in between, and you're a position or daily time frame trader, I'd stay long. All systems are go. All the EMAs have curled up, and price is walking the 8 EMA here in pink. And whenever you see a stock walking up the 8 EMA, that's always a really great sign, a very good show of strength. Tesla just consolidating here below 690. You can see, however, that we broke out, back tested the gap, and now we've got a series of higher highs against this 690 level. So there's some buying pressure there, and you get a breakout above 690. I'd be looking for 710 and then a test of this gap up here at 725. Microsoft, I've cleaned up the chart. A lot of you will probably be thankful of that. It was pretty messy. I've dropped in this nice channel Microsoft has been working on with the low side right here, midpoint, and then high end of the channel. We've had some consolidating action here. What the bulls want to see is a breakout above 271.50 and then a move to recapture the midpoint of the channel. And then you'd be looking at a run to the top side of the channel up in the 280s, 285s if this market takes off. And remember, if you're new here, I posted an interesting graphic yesterday on the blog post. The next 2 weeks have been on average the best 2 weeks of the year since 1950. We're heading into earnings. That in itself is bullish. First 2 weeks of July have been historically very bullish. So I think a lot rides on this job report tomorrow. And if the market digests that and doesn't pull the rug, we could have a very good couple of weeks. So keep your eye on Microsoft. Big cap tech has definitely been working. The one that's wobbled a little bit is Amazon. We had a stellar run here. We got rejected here at 35.20 and have come back, and now we've bounced, but we had a weak close yesterday. So it wouldn't take a lot of imagination for me to draw this in as a bear flag. First leg down, bear flag, breakdown. We don't want to see that. We want to see this hold the line here this morning and tomorrow and make a move towards 3,500 and get this thing back on track, and we can call this, a 1 or 2 day just corrective event of this thing. But if this thing turns out to be a bear flag and PPO rolls over here right at the 0 line and RSI starts coming down here, losing 50 and making an extended move towards 30, that's not going to be good. And that's going to be a drag on big cap tech just because it's such a big company. But this is really the only one that's wobbling of the mega cap names. I mean, Facebook, Apple, Microsoft, Tesla, Google, they all look great. Netflix is starting to make noise. So this is the one that is holding up the show. And so I'm watching this very carefully. Netflix has made this impulsive move into this $35 gap. Got rejected here at 532.50 and has backed off. If you're an active trader and you come back in here to 525, I think you can try, an active long. But the chart in general is bullish. We've had a $30 consolidation, and now we've broken out. What I'm looking for on the daily time frame is at some point this $35 gap to fill up to 550. And the only big fly in the ointment would be if price drops into this gap and then fills it all the way back to 517, comes back into 515 and loses it. Now, if you haven't been involved in all of this and you get that back touch of 515, you got to hit it there. You got to hit it there. Why? Because breakout back touch happens all the time. The unfinished business of this open gap here would be taken care of. That's a nice thing technically. Don't have to worry about it anymore. Comes back, back tests, and then accelerates higher. So you play that how you want, either at the top of the gap or down at the bottom of the gap near 515. That's all active trading stuff. But on the daily time frame, you want to be long and look for this $35 gap fill. Google has been frustrating everybody in this consolidation range, but now for the last week, we've been in a very narrow range between 2435 and 2450. You want to see this breakout and go to 2500. That's the measured move target. $50 consolidation range added on to 2450 on the breakout should send us to 2500. And I think what you're going to see, all these names are going to either break out or there's going to be a problem. I mean, it sounds simplistic, but if there's a launch tomorrow or a launch into earnings over the next 2 weeks, you're going to see Google break out. You're going to see Facebook run higher. You're going to see Apple take out 138 and move higher. So I don't think any of these are going to unilaterally, by themselves break out. You're going to have alarms firing all over the place when these names decide to make their move. SMH continues to look great. We've had this $10 consolidation. We broke out and are grinding higher. Bigger picture, we talked about this yesterday. Big $35 consolidation range. We've broken out above this 258. So now, just on a measured move, technical basis, the target is 295. So anything above 258 or even 256, if you wanted to nitpick how I've drawn this, is bullish. And I would stay long semis until there's a reason not to be. And the only reason I see there is coming back into this range. You wouldn't really want to see that. We've beat that to death. Once you break out of a range, you don't want to see it come back in. So anyhow, semis are starting to show some strength. I've been involved in AMD. I went back and messed around, mostly cosmetic stuff with this chart. Consolidation range here, broke out, could not really hold it, came back down, $13 consolidation range, breakout, technical target 100. Why? $13 consolidation, breakout from 87 gives you 100. Now we're halfway there. We're at 94, and that is where some technical resistance lies. I was able to catch this move with the help of Kramer yesterday with a pump pre-market. So I was able to get, I had short-term calls on this breakout. We had talked about that earlier in the week. That played out great. And so now you see a breakout above 94. I see 98 at the prior high being the first target. And I think once you get to 98, just as a matter of course, you're going to tag 100. And I will tell you that in the options market, one thing that I've been very encouraged about is bigger traders looking out into time. Where are they looking? AMD reports at the end of July. I believe it's July 27th, maybe. They're looking out at the end of July, and they're looking out into August, September, and even January of 22, positioning themselves bullishly. I've seen a lot of September 100s. I've seen a lot of January 100s. So they're going a little bit out of the money. They're counting on AMD breaking out to all-time highs, and that's always encouraging. It's one thing to see a zillion calls on Thursday for Friday. Those are lottery tickets. But when you start seeing bigger numbers out in time, those are more structural type bets with bigger premiums to pay and looking for a continued bull move. And on the technicals, we've broken above the zero line after a long consolidation below. That's bullish. You can see the PPO curling higher from the signal line. That's always bullish. And although we're a little overbought on RSI, that's bullish. So whether we get a little consolidation here below 94 or break out and then consolidate above, either of those scenarios is fine, and they're both bullish. So I think this is going higher. I think we're going to ultimately tag 98 and break out just based on the chart. Collectively, you've got the whole group moving higher as marked by SMH breaking out, and now you've got AMD in that group breaking out as well. So the stars are aligned there. Now I want to quickly go over something that I'm a little embarrassed about. There were some major moves yesterday in the agricultural commodities. We'll start with sugar here. It was only up 1.43%, but you can see a nice move off of the 50. In the U.S., we had a USDA report. What did it say? It said everybody was thinking that the acreage planted, for corn, wheat, and soy were going to be up because of the strong market. Well, they were down. Also, inventories of corn, wheat, and soy are at 6 or 7 year lows. Number 3, heat wave in the Midwest. So all three of those things were combined yesterday for moonshot bars on the ag complex. And so, yeah, we missed the move yesterday, but I think it's enough to bring that into focus. Here in sugarcane, there's a lot of production down in Brazil, and from what I understand, it hasn't rained in Brazil for a month. So if we get this breakout here at 850, that would be a green light to get long cane. You've got an impulsive move, a flag, you get a breakout above 850, it's going higher. And you've also got a PPO reset here at the zero line and a bull cross. You've got an RSI breakout here and a move back above 50. So I like sugar long above 850. I'd put an alarm there if you're interested at all. Corn, 7% limit up yesterday. We're inside this box. We tested the bottom, which if you were on top of it would have been a very objective place to try a long. Even though you were below all the moving averages, you were testing a prior low, and you could have set a really tight stop below if you wanted to try that. But that's all water under the bridge. You could mark the top of this candle yesterday and set a stop just below and see if you get this move here to 23. But if you wanted to just sit tight and see if you get that breakout above 23, that would be fine. Soybeans, same picture. Big move, 5%. I would set an alarm at 24.50 for a breakout. You can see the PPO curling up. Wheat. This is probably the nicest setup of the individual grains that I see. Why? It looks a lot like Facebook from the standpoint of you got an impulsive move higher. Now you've got this pennant formation. You get a breakout above 680 right here. I think it gives you running room to 7 and then 740. And then if you get that breakout with the measured move, you could easily see $8 on wheat. Another way to play is just focus on DBA, which is the ETF that combines all the grains. That way you don't need to worry about individual ones, and just play the basket. We're right here in the middle of this range. You can decide if you want to try to do something in between or see if there's a pullback. But you can see this is, as a technician, you hate when you miss this stuff. I had a beautiful trend line here. We got this rejection at 1925, came back and held this trend line. And whenever you've got a back test of the trend line, that's an objective place to try and long. So I missed it. But if the structural dynamics hold, meaning, they're not going to plant anymore this year, so production's going to be down, inventories are down, costs are up, and, weather, while you can't count on it, could be a very big contributing factor. If it's going to be really dry in the Midwest, prices could really spike. So we've seen this commodity inflation all along here, and yes, it's wobbled, but you can also look at that as a consolidation for a continued move higher. So set some alarms, and let's see where the commodities go. And, oil's running, natural gas is running, copper is starting to stabilize, the industrial metals are starting to stabilize. So let's keep it somewhere on the radar screen, because one thing that's nice is corn doesn't have anything to do with Facebook, and having non-correlated assets to the stock market is a good thing, especially if you're on the right side of the trade. So lesson to me, let it fall off the radar screen, and I missed it, but let's bring it back into focus and see if we can find some objective entries. Look at cane, sugar right there at the top of the range. Look at wheat that's poised for a breakout, and keep the other commodities front and center. So, hey, if you're new here, I really appreciate your time. Hit the subscribe button and the alarm bell. You get more of this content. I take pride on nailing levels. And if you get to the point of being able to trust my levels, that opens up your bandwidth to focus on execution. And that's the name of the game in trading, is to execute good trades. That's the one thing I can't do for you. I cannot hit the buy and sell trigger for you. You got to do that yourself. But what I can give you is a lot of good setups, objective setups with tight stops. So you know exactly when you're right and exactly when you're wrong. So be glad to have you. And also jump over in the show notes. You'll see links to the blog site where you can have access to all the other information there. A lot of helpful articles. And also you'll see a link where you can register for all my content with simply your email. Takes 5 seconds, and then you'll get any midday updates that I have, after hours posts, things like that. I think you would benefit greatly. And of course, longtime listeners and supporters, I really appreciate it. Pass the link along, give me a hand, help me grow the channel. I really appreciate it. So this has been Chris Buss with Traders Profit Compass. Hope you have a good trading day. Talk to you next time.